Hello and welcome to the channel Mais Foco. Today I'm sharing here the story of Farfetch, not just the meteoric rise, but at the same time what they promise in the luxury e-commerce sector, but also the dramatic downfall. As an investor, I've been witnessing firsthand repercussions of the company. Well, the ambitions maybe outpacing its grasp, leading to significant financial losses for myself included and a lot of investors. Not to mention as well the co-workers that were laid off by this company. This narrative isn't just like about the numbers, it is also about the people who were affected, the trust that they erode, and it might be just a reminder of the risk of the volatility of the world of tech-driven markets and as well as investments. This video is here to share the tale of Farfetch, a company that promised, again, luxury, but maybe they left a trail of disappointment, and examine as well some of the actions of the CEO whose decisions have probably been questioned in the last few months. Just to start off, in 2007, Neves launched Farfetch, probably trying to revolutionize the industry luxury of fashion by connecting over 700 boutiques and brands with fashion enthusiasts around the world. This global platform became a nexus probably here for creators, curators, as well as consumers, and probably brought attention to a lot of brands in this area in one single platform. José, who's probably here called as a visionary Portuguese entrepreneur, blended this passion for fashion with technology to create Farfetch. His ambition was kind of to build a global technology platform that would kind of redefine the fashion retail of luxury. Here, Farfetch stands out as a fashion online platform, uniquely operating without initially trying to hold inventory. It offers like a marketplace model that reduces a lot of the overhead costs, earning here as well revenue through sales commissions and providing e-commerce solutions by their platform solutions. This approach definitely made kind of unique brands of fashion more accessible to the global audience, here fostering some growth and innovation within the industry. I will call out three main pillars of Farfetch: is digital marketplace, connecting here buyers and sellers globally, facilitating as well a competitive pricing and a vast product range without owning inventory. Farfetch earns like a commission. I think it could go up to 30% of the commission of sales, and also the fulfillment services, probably like between 5 and 10% of commission. This obviously provides here merchants with the inventory management as well as global exposure, a lot of the data analytics and BI capabilities, as well as the advanced technology platforms and tools offered to them. Then they have here the platform solutions, as an example, offering like a SaaS solution. Farfetch empowers here brands to enhance their online presence with customized e-commerce services. It includes a range of e-commerce solutions like marketing, global payments as well, and logistics. And then lastly, they have the brand platform. So they own, or at this point in time, I don't actually know, but they own unique brands like Browns and Stadium Goods. And obviously, they also launch fashion brands through the New Guards group, enriching its marketplace with exclusive products. Together, this three pillars allow Farfetch to operate a scalable. We thought it was low overhead, but probably in the last 1 year, we noticed that it wasn't really like that. The business model that caters to, again, a global audience, provides brands with a platform to reach customers worldwide and offers consumers diverse, high-quality luxury shopping experience. I go back here to the IPO in September 2018. Farfetch went public, and its shares initially priced at $20, peaked at $30 kind of on its debut. And this was done in the New York Stock Exchange. This IPO significantly significantly increased Jusanev's fortune, making his 15% stake worth $1.3 billion. Farfetch was a successful IPO, which raised around $900 million in selling shares above the anticipated range. And as we said before, this increased substantially the wealth of Jusanev's. Then we have here Farfetch massive growth year over year. It can be obviously attributed to its strategic expansions, partnerships, as well as the technology advancements within this industry. The company has, well, seen increase in global user base, sales, revenue through obviously diversifying here the product offers. The company has seen a significant increase in global user base as well as sales and revenue through diversification of products offerings and enhancing the platform to attract more brands and boutiques. Obviously, by continuously innovating and adapting here to market trends, Farfetch has managed to expand its reach, influence in the world of luxury fashion, making it like one of the key players among the online retailers. In 2008, when they launched Farfetch.com as an e-commerce marketplace, they started off with 40 boutiques in Europe, and then the following year they went to the United States. If we go between 2008 and 2014, they went through multiple round seeds to raise money, and I think it was around $150 million, and by 2015 they have achieved 1 billion status of, well, what they call the unicorn. But how was the success driven in the last few years? They went on an acquisition spree. They had the Browns, a UK retailer, Stadium Goods, a sneakers company. They also bought it for like $250 million. New Guards Group for almost 700 million. Then they had also Violet Grey, which was a beauty brand for 50 million, and Net-a-Porter, showcasing the Farfetch ambition to diversify and control more this market. They had a lot more acquisitions, and probably they spent somewhere between $1 billion and $2 billion acquiring them all, which means a lot of the investors' money was going into these brands. In 2020, two big international players, Richemont and Alibaba, they jointly invested $600 million in private convertible notes and $500 million in Farfetch China, owning a combined stake of 25% in a kind of joint venture. At this point, I think it was pretty much impossible to ignore Farfetch. And here, if you go to the, despite the within the COVID era, the resilience of luxury, even during the pandemic, a lot of people at that point in time, they rumored financial struggles, and it came as a surprise because obviously the pandemic gave them a huge boost, and a lot of people started having a lot of money, disposable income, to go and spend during that era online. Outside their core business, or let's say Jusanev's core business, its founder had many big and far-fetched ideas as well. So one of them was called Fuse Valley. This was described, I think Farfetch launched the concept of Fuse Valley, or the initiative, including as one of the investors among, and the goal was kind of to create the innovation hub in Portugal to foster technology solutions for fashion. And this was a big undertaking. I think it was around 200,000 square meters filled with art and more, like dubbed as many as the Portuguese Silicon Valley. The project was also conceived as a community village and would occupy around the hillside of Oporto, 7 kilometers away from the center. And this was being developed by a group called Casso Group, a real estate developer. So secondly, the Jusanevs also created, as all of them, a non-profit foundation in 2019. This was called the Jusanevs Foundation. It's a non-profit institution that began activities in the same year. and it was born with the ambition of elevating the status of Portugal in the rankings, whether international rankings, whether it was education, human development, and it would help transform the country into a knowledge society over a period of 20 years. The focus of foundation was kind of centered at the education, promoting here lifelong learning, and as well as a strong emphasis here in the future skills. So in more recent news, as we came to know a couple of weeks ago, basically the founder told the media that he would return as the head of the foundation that was previously appointed to another person. So the downfall of Farfetch can be probably attributed to several factors. As you may be aware, obviously flawed business model, but it includes here one of the biggest problems, but I think the biggest problem it started was the dual class shared structure, which gave here José Neves disproportionate voting rights. He owned 15% of Farfetch, but controlled over I think it was 77% of the voting rights. In hindsight, I think this was the biggest red flag a company can have, and me as an investor, I think I will probably not invest in any company that has that like the same structure. I think the first one, obviously we were going through an era of low interest rates, but the financial challenges such as reporting losses subsequent to the fiscal years post IPO, and the operational challenges like maintaining the exclusivity of the brands online specifically. Secondly, the Farfetch entered also beauty market in April. I think it was last year or the year before. They launched Farfetch Beauty after spending 50 million to acquire here Violet Grey. However, here facing stiff competition from both online and brick and mortar retails, I think the challenges in establishing here brand loyalty didn't actually pay off, so they had to close the division. I think it started from that specific moment that not really good news were coming out. And thirdly, I think failed to address the economic downturn post-pandemic in how direct-to-consumer trends among the people who buy these sort of things become to challenge Farfetch model, right? A lot of the people actually wanted to go to retail stores, experience this type of brands where you sit down, you speak with the representative, they offer you coffee, exclusive experience, hear the customer at the center. While you don't really have that in the online marketplace, so I think that's what they really came into question. I think another thing, as a fourth point here, there are other challenges that obviously operating losses despite revenue growth attributed to always being in investment mode, and the high cost base and thin margins in some cases. And then fifth is here the luxury e-commerce sector is a competitive market and difficult the technology upgrades and to maintaining market share against some of the big competitors, and I think that complicated with the further venture of Net-a-Porter. Then it came the downfall and Coupang's lifeline. So the events leading to Farfetch financial distress, I think included first, postponing financial results, which was the biggest red flag you can have. And then obviously Moody's, the credit agency, they downgraded Farfetch. Then Coupang, the Amazon of Asia, came to the rescue with an emergency loan intended as a rescue deal with implications for Farfetch operations and independence. At this point, the only communication being released to the market was extremely complicated legal jargon meant to confuse the hell out of everyone. So one thing was clear at that point, the worst was coming. So once investors gone through the information, they quickly understood the huge potential of an asset purchase being made by Coupang. So here an asset purchase involves one company buying the physical or intellectual property assets of another company. And this can include technology, it can include trademarks, I don't know, customer base, physical inventory, but it does not automatically transfer the liabilities associated with the business being acquired. So an asset purchase that is definitely like rushed, not transparent, So can raise here multiple questions about the fairness and the proper due diligence being done. The acquisition of Farfetch by Coupang has led a lot of controversy with here creditors alleging that Jose orchestrated the company's devaluation for obviously personal gain, especially because of the rush 500 million deal with Coupang. These allegations highlighted governance issues. I think it also suggests a lack of checks and balances within Farfetch structure. Obviously, it comes into question as well the stock structure. It comes into question the investors. Some of them were also investors of Coupang. The CFO resigning in the previous year, a new CFO comes in and well, it doesn't check these sort of things. So obviously there was and still is like a petition filed in the Cayman Islands by creditors. Anytime that a company has part of the legal entity in Cayman Island, again, I think is a red flag as well. So they filed a petition facing 400 million losses, seeking not only to financial compensation, but also a thorough investigation into the acquisition process and Nev's roles, emphasizing concerns over Farfetch governance and decision making. Soon after, the previous month, Jose Neves resigned. They followed by the official acquisition, highlighting again impact to the shareholders and employees alike. Despite the initial capital infusion and operating continuity, the sale terms face criticism for erasing shareholder and employee stock value, contradicting the Farfetch innovation approach to employee stock ownership. The agreement terms definitely affected Farfetch employees, including in the stock distribution plan by Jose Neves. Here was the stock distribution was aimed to make all employees shareholders, a novel approach both in Portugal and internationally. Despite efforts of creating this type of attractive compensation packages, with substantial stock rewards, as an example, 2020 and 21, the sale outcome led to significant losses for employees holding company shares, underscoring the risk of stock-based compensation in corporate acquisitions. Farfetch was among the first companies to offer stock distributions to employees as compensation in Portugal. Even Jose Neves mentioned in an interview to a local newspaper, Echo, that around $80 million in shares were given to workers in 2020 and 2021, which a lot of that was obviously lost. They also announced layoffs starting in Portugal as part of the reorganization and focus on the core strengths and financial stability. This move affected both long-standing and recently joined executives, indicating here probably a major shift in Farfetch strategy and operations. The company plans to reduce its workforce by 25-30%. Obviously, it can go up to 40-50%, and this marks a transition period under the new management. I think Farfetch saga highlights the challenges of corporate governance, no doubt about that, and rapidly growing sectors, emphasizing the importance of clear, balanced oversight, transparency, and most of all, here stakeholder interest is protected with ethical management and sustainable growth. The unfolding legal issues and acquisitions obviously impact the broader business market, but hopefully this reshapes the practices of founder stakeholder relationships across the corporate landscape. So the main, let's say, two reasons I did this video are obviously for 2 points. One is first, I would like to also share the post on LinkedIn shared by Luis Parada with companies that are actively hiring in Portugal for people who were laid off. Unfortunately, maybe they can start looking for another job. Secondly, I think I would also like to share the Telegram group for investors who are trying to get some justice and recover some of those losses due to alleged mismanagement of the company. So I think those are the main two reasons. I would like to thank everyone for joining and watching this video, because really it was my first video in English, but I really wanted to get the most reach out there. Thank you.